So we have open shorts. We talk about when open shorts have some profit, there's a self-fulfilling prophecy that it's a magnet to go back there. And that's what we were telling us before it goes back there. When you've got open shorts above, so let's say price is down there, and let's say you're short from a price above. So you got some money in the trade. And all of a sudden the price goes up a little bit. You still got money in the trade, just not as much. Then it goes up a little bit more. And you're like, damn it, I wish I'd have bought it there. So you move a bit up. Because remember, if you're short, what are you using to cover that short? A buy order. So you're a buyer. When you're short, you're a buyer. So if you're a buyer and you wish you'd have bought it there because that's where it went to give you a bigger profit, but now it's up in here. Now it's a 4-point winner, but it was a 6-point winner. Feels like you lost 2 points. So then it goes up a little bit more. And you're like, damn it. And now you put a bid in there. Because remember, you're covering the short trying to take profit. You're chasing your profit up. And the more it shrinks, the more you feel like you lost, even though you're still up money in the trade. So you chase it maybe right back into where you got short and say, I'm not losing money on this trade. You take a break even +1 or you take a scratch. You were the reason why the market went up to that short. If indeed there were a lot of shorts there, if it was just you, that's going to be irrelevant. If there's a lot of shorts above, then there's a lot of people that need to buy it to cover that short. And it becomes a self-fulfilling prophecy where they buy it up into the price where they're short from because they don't want it to turn to a loser. And then the ones that are stuck, you get bullish above it. That's why we went to it and stopped in here and then re-rallied through it. But we've got the tools to be able to find other people's positions. And if you realize that knowing other people's positions is knowing your competition, and if you know your competition, you have a chance. Most people who trade have no idea what their competition is. Competition are other people who are opening and closing longs and shorts, not just buying and selling, the intent of the buying and the selling. So the competition is, if you're short, do you want everybody short? Hell no. Too many shorts, too many buyers. Too many buyers, the price can't go down. And that's what you want price to do if you're short. If you're short, you want price to go down. But if everybody's looking for price to go down, that's when it doesn't happen. It becomes a crowded trade, and that's the definition of a crowded trade. Too many people looking for it to do one thing. If everybody wants to, if everybody is short and they're looking for obviously price to go down, but there's all the buying that exists from all those short positions, it can't go down. So the key to this video and the key to the beginning of your real education is understanding that a long position is now a seller to cover it. A short position is now a buyer to cover it. Understand that back of your hand. And now order flow starts to click for you. And now understanding your competition starts to click for you. But without this information and everything else is hocus pocus and complete randomness.